observations and trends within the pension fund, I think it's helpful for us to think about why we need alternative investments in the portfolio. Because the overall observation is pension funds across the globe are shifting allocations to private investments. But there's a reason for why they are doing that. In this chart here, you can see that we're showing the implications of including alternative investments in the portfolio. Like that can help reduce overall volatility in the portfolio and also provide opportunities for enhanced returns, which is not guaranteed. But the other bit of it also is to recognize that those effects, those outcomes are dependent on additional factors like manager selection, like the macroeconomic environment of what's going on, and also the right sizing of these allocations in portfolios. So when we take a look at US pensions, the big trend that we can observe is in the past 2 decades, the allocations to private investments has increased over time. And part of why we're seeing this shift is because, first of all, the long-term liabilities of pension funds continue to increase. In the US, for example, that amount has reduced from $1.6 trillion to $1.3 trillion. But then again, these pension funds also realize that they cannot rely on traditional stocks and bonds returns to sustain this ever-growing debt. So they have to think about ways to diversify their returns over the long term. In 2004, over 200 pension funds had an assumed rate of return of over 7%. Now that number is less than 50. So that just makes the case for pension funds to find diversified ways to generate returns in order to meet their long-term liabilities. So I thought that the other interesting thing to look at was to see how global investors are allocating across their different asset classes. So private equity has always been the dominant private investment that people run to. But today, as you see, back to the point about diversification, it's not only diversification out of traditional assets, but also diversification into private investment, but also diversification within private investments. So you can see global investors not just only allocating to private equity, but also real estate infrastructure, because there are different opportunities in those different spaces. And as an investor, you want to make sure that you're positioned across the board so that you're able to hedge against like volatility and other things that you may not even expect to come in the macroeconomic environment. So you can see pensions not just only investing in private equity or private investment, but also looking at other alternative solutions to incorporate in their portfolios. So the other case that we've seen of why we've seen this shift into alternative investment is returns. So back to the point about long-term liabilities, those liabilities continue to grow, and looking at private investment returns with a focus on the different asset classes over the past few years, you can see that they've been able to generate double-digit returns if you're looking at the IRR. And this makes a case for why like pension funds would consider allocating or at least understanding the role that these different asset classes play in their portfolios. For example, private equity in the US pension funds has generated about 15% over a 10-year period of time. And when pensions are thinking about their strategic allocations, private investments, alternative investments continue to be an important aspect of that conversation. And this helps pensions find additional ways to generate returns in their portfolio. I think the overall observation is private investments continue to play an important role and can no longer be ignored. But now is a question about understanding which private investment allocation should be made in the portfolio and which managers should be considered, as well as thinking about how to strategically allocate where it's not like an immediate allocation into the portfolio, but also over a period of time. And then lastly, to look at what is going on across the globe, North America is pro-alternatives. It's more established in terms of this market, and a lot of pensions have been allocating over the past 2 decades. And when we look at EMEA, it's taken after North America as well. But all going back to the point about returns, but also diversification and reduced overall volatility in the portfolio. So APAC still has a long way to go, which I think is a good thing for the region when it comes to like looking at the pensions. So that is opportunity for sustained growth with pensions and also being able to meet those liabilities. I think the point about the characteristics of APAC investors in general, wanting liquidity, not wanting to take on too much risk. I think when we think about pensions specifically, there is an opportunity to participate in the private markets because the mandate is longer term and they have that room to stomach even short-term volatility, which the individual investor may not be able to stomach. I think overall, there's opportunity in APAC to grow, and there's a lot of things we can learn from North America and India in terms of how they're thinking about management and allocation to private investments. So it continues to grow, and there's opportunities for pensions to participate in this growth. Thank you.
我们谢谢的。